The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Happy Friday, everyone. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. First of all, a big thank you to the great turnout last night for my first webinar of the year at TFNN last night. I appreciate you all tuning in. Hopefully you found it helpful. Again, any questions, whether you attended the webinar last night or questions that you want to ask me, I am accessible by email, Ken Shreve, one word, at tfnn.com. You can also follow me on Twitter, at Ken Shreve. And as far as the show, it's a call-in show. So 877-927-6648, that is the number to use. And my show airs every day on TFNN from 3 to 4 Eastern. It's also available as a podcast on iTunes, so if you can't listen live, you can head over to iTunes, download the podcast. Feel free to leave a review if the spirit moves you. And don't forget, you can listen to all TFNN programming on your smartphone. A lot of people like to do it that way. Just open your smartphone browser, type in tfnn.mobi. Very simple, very intuitive, great way to listen to the stream 24/7. And Tiger TV, another great feature at tfnn.com. If you want to look at charts live right along with me and also get the show audio, you can use Tiger TV to do that. It is carried live on Channel 1 on the homepage of TFNN.com. The show is archived on Channel 13. Tiger TV is also accessible on your handheld device. All you have to do is, once again, open your smartphone browser, type in tfnn.com, and then over on the top right-hand side of the home page, you'll see a box with 3 cell phones in there. And just click that box. It'll recognize what type of device you have and start streaming Tiger TV. So one other house cleaning item, don't forget, on the homepage of tfnn.com, you'll see some details about the Great Panther Super Silver giveaway. That's going to be going on from January 28th through February 1st, every hour from 9 a.m. to 6 p.m. Eastern. Going to be giving away free pieces of silver to people who register free right on the homepage of tfnn.com. So be sure to sign up for that. All right, let's check in on the markets here. NASDAQ Composite hanging in there. Once again, market acting resilient. I hear the bear camp out there, and, the bears are growling and prowling, and you're just not seeing much in the way of sell signals here. Another, what looks to be a constructive day of trading. Options expired today, so volume is on the heavy side. NASDAQ Composite right now down 8 points, 0.3% to 31.27, trading near its high for the session. It hit an intraday low of 31.19. The S&P 500 is also trading in relatively tight range here. You can see this is looks like is going to be an inside day here. See how the S&P 500's trading range today is inside of the range that we saw yesterday. So that's a sign of strength and support. The S&P 500 up fractionally to 1481, and the Dow. Check in on the blue chip index here. We'll see it is also trading tightly, working on an inside day here, up a little more than 12 points to 13,608. Volume on the NASDAQ yesterday was 1.71 billion shares. That's pretty much an average day of trading. Right now we are tracking a little bit higher than that. On the NASDAQ, I think at last check we were about 10%, maybe 20% higher than that. Yeah, right around 10% higher so far. tracking higher than the 1.7 billion that we saw in the NASDAQ yesterday. NYSE volume much heavier. We're tracking about 50 to 60% higher on Thursday. Volume on the New York Stock Exchange totaled 702 million shares. If you are a reader of the big picture column in Investors Business Daily, which I am, I use the column to sort of help me navigate the market. You'll notice that they're still keeping a fairly heavy distribution day count in the market pulse area of the column. And what they do there is that during market uptrends, they keep track of distribution days or higher volume declines in the major averages. And it's always important to monitor higher volume declines during an uptrend, because when you see a lot of them, it can sometimes flag even more market weakness to come down the line. Now, at first glance, it's a little bit troubling, because we've got 5 higher volume declines in recent weeks for the NASDAQ Composite and the NYSE Composite, and 4 for the S&P 500. That would be considered elevated. But, I went back and kind of looked at these higher volume declines in recent weeks, and really what I found was a market that really isn't showing that much in the way of distribution. So not going to say take these distribution days with a grain of salt, but when I went back and looked at the 5 most recent higher volume declines for the NYSE Composite, let me pull up the NYSE Composite in Tiger TV here. And they went back all the way to, mid-December, right in this area here. So there were some that occurred before the NYSE gapped up on January 2nd here. And frankly, I thought the distribution day count would have just gone away after the recent breakout for the NYSE Composite, but it's still there. But I just wanted to clarify this for some that have been asking. Anyway, NYSE Composite on January 16th, there was a higher volume decline, but volume was below average. You had to close near session highs. That day didn't really feel like distribution. On January 8th, you had another average volume day where volume did come in higher than the prior session, but another close near highs. So there were buyers around. December 26th, the day after Christmas, really light volume. 474 million shares. Yes, it was higher than the prior session, but again, institutional selling, probably not. December 21st, you had options expire. Volume was very heavy. I think that was on this day right here, but again, you get a close near session highs. And then December 13th, you also had a higher volume decline, but just really the market does not feel like it's under even mild distribution here. So just to clarify that, you do want to use higher volume declines. It's a good way to stay abreast of underlying market health. And when you're in an uptrend and you start to see higher volume declines multiply, and you start to see technical damage being done to the market, that's normally worth paying attention to. But the elevated distribution day count right now is not something that I'm overly concerned about, but we'll continue to monitor it in coming days. Kind of an interesting headline out of Capitol Hill this morning. Apparently the House of Representatives will vote next week to authorize a 3-month increase in the debt ceiling. That's according to House Majority Leader Eric Cantor. So apparently the Republicans are interested in moving on this. The good news about this is that it is going to remove a layer of uncertainty from the market. And, if this passes and that debt ceiling is increased, then, what's that going to do for stocks? That could be good news for the market. So hopefully that will get through next week and remove, this debt ceiling uncertainty that the market is not concerned about now. But we said that, once fourth quarter earnings season is over, the focus is probably going to turn back on politics, and so we'll see what happens. Bond yields slightly lower today. The yield on the 10-year note 1.84%. The 30-year bond at 3.03%. February gold down $3.80, settles at $1,687 an ounce for the week. it was up 1.6%. I've been haven't been made any secret of my feeling here about the GLD. Looking at the technical makeup of the GLD, this is still in a downtrend, so it is not time to get bullish here yet. I think that you can see the GLD right now still stuck underneath its 50-day moving average. It touched the moving average yesterday, tried to get back up close to it today, but right now trading near its session low, down 24 cents to 163.11. So GLD still in a downtrend until proven otherwise. To me, you're probably looking, it's going to have to get over 165-ish, maybe even 166 to really start a legitimate uptrend here. The U.S. dollar index up a little bit today, 79.99 at last check, up 0.4%. The U.S. dollar index in a similarly bearish setup here. Not out of the question that the GLD could, start moving higher here, especially if it moves above its 50-day moving average. But the UUP, you can see yesterday closed at. I don't want the UUP. What am I doing here? That's the ETF that tracks the dollar. I want the U.S. dollar index, so bear with me as I pull this up in Tiger TV. And here we go. You can see the U.S. dollar index still below a couple of key resistance levels here. The 50-day moving average is at 80.16. The 200-day moving average is at 80.86. So 80.16 is going to be that first level that the greenback is going to have to conquer here. Again, it is higher today, rallying a little bit, up about 0.4%, just underneath 80. February crude oil today up 7 cents, just a measly 7 cents. Settles at 95.56 a barrel for the week. Good week for crude, up 2.1%, and we'll see that move in crude oil by looking at the USO. This is the ETF, the United States Oil Fund ETF that tracks the spot price of West Texas Intermediate light sweet crude oil. Pretty impressive run for oil. And on the webinar yesterday, I did mention some energy names. When you look in the energy sector, there's a lot of industry groups. There's exploration and production firms. There are the refiners that have done very well. In fact, there's DK, Delek, U.S. Holdings here. Beautiful breakout for this stock over 27, continuing to hold gains nicely. And then ALJ, let's check in on ALJ here, because this is another refiner that is has been acting pretty well here. Headed into today, it was working on 6 straight gains, under a little bit of pressure today, down 3.1% to 1766. So DK looks to be the stronger performer at this point. But tell you what, we're going to head into break, and when we come back, I'm going to take a look at another subgroup in the oil and gas sector that's just got a bunch of stocks in it that look like they're really ready to run here. And it is the equipment makers in the oil and gas sector. We'll take a look at 4 of them when we come back. You're listening to Breakout Investing on TFNN. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
you take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th, and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Before we went into break, we were talking about crude oil today. Not much movement, up 7 cents to $95.56 a barrel, up 2.1% on the week. And there's really one industry group, well, a couple of industry groups. The refiners continue to look pretty good here. Many are a bit extended, but in the equipment group, boy, there's a lot of stocks looking pretty good here. First one I wanted to take a look at would be, let's take a look at, let's see here. There's Dresser Rand. This is ticker DRC, Dresser Rand. You can see a little breakout, not last week, but the week before, holding gains nicely here, holding nicely above its 10-week moving average. So this one still looks like it's in the early stages of a breakout. DRC on the New York Stock Exchange, and then you also have DRQ, Drillquip, and another stock here, trying to come out of a big long base here, working on its 3rd straight weekly price gain. Hasn't been an explosive breakout, but a breakout nonetheless. This one still looks like it's within range here. DRQ, and then there's another company in their group. There's 4 of them total. Another one would be Flowtech, FTECH, FTK is the symbol here. So 3 straight NYSE listed companies. In fact, the fourth is an NYSE listed stock as well. But Flowtech Industries, you can see a little base forming here, trading some tight closes here. These are all weekly charts that we are looking at. Wouldn't be surprised to see Flowtech go for an upside breakout in the near term. And finally, another equipment maker here would be Cameron International, CAM. This is a nice base forming here, trading around 58.76 right now. Could try to take out its September high of 60. We'll see what happens, but I think those are four high-quality names in the equipment group: Dresser Rand, DRC, Flowtech, FTK, Cameron International, CAM, and also Drillquip, DRQ. IPO news. I don't have charts for these stocks, but we can look at prices here. CyrusOne. This is a data center real estate investment trust, priced last night at 19, above the expected range of 16 to 18. Last trading at 21.03, so that's good for a 10.7% gain on the day. IPO market very, very quiet. I mean, it's been quiet for a while, started to show signs of life, got very quiet again. I don't recall any. I'm sure some companies have come public in 2013, but it's been a very quiet start to the year. But CyrusOne, CONE, Cone is the ticker, having a good day, good debut today. And then how about Norwegian Cruise Lines? NCLH. This one has been a monster performer today. It also priced last night at 19. The expected range here was supposed to be 16 to 18. Norwegian Cruise Lines up at 24.99. That's good for a 31.5% gain today. My general take on IPOs is, I never buy an IPO during the first 1, 2, 3 days of trading. In fact, I like to, watch how they trade for a few weeks. So you get an initial pop, and it moves sideways for a little while. I like to see IPOs generally develop a trading personality, and it's usually going to take at least 2 or 3 weeks for that to happen. But IPOs, new issues are really one of the things I focus on a lot for my Ultimate Growth Stocks newsletter, because again, when you're buying growth stocks, the goal is to buy a growth stock in the early stages of a move, buying a company in the early stages of growth, not looking at these companies that are already up several 100% over the past few years. So when you're looking at the new issue market and looking at companies that have only been trading for 1, 2, 3, 5 years, chances are you're still looking at companies that are still potentially in the early stages of an upward move. So not interested in owning CyrusOne or Norwegian Cruise Lines at this point, but once they've got a little bit of a trading history, we look at the weekly chart, maybe look at fundamentals a little more, we can make a more informed decision. Very quiet in terms of economic data today. We had University of Michigan consumer sentiment came in disappointing, 71.3 versus a prior reading of 72.9. The estimate was for an increase to 75. Of course, yesterday weekly jobless claims came in much better than expected. Big jump in December housing starts, and a disappointing reading from the January Philadelphia Fed. That was all yesterday. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone. About 25 minutes left to go in Friday's session. TGIF. Remember, stock market closed on Monday in observance of Martin Luther King Day, so hope you enjoy the long 3-day weekend. Checking in on the markets here, the NASDAQ Composite trading up near its session high. That has been sort of a common occurrence for the NASDAQ Composite in recent days. A lot of closes near highs, even when it's closed lower. Over the past couple of weeks, it always seems to rally, close up near its highs. So still a bid out there for stocks, no question about it. But NASDAQ Composite down about 5.5 points now to 3130. The S&P 500 large cap index, nice little inside day working here, trading right at its session high here, up a little more than 2 points to 1483, and the Dow Jones Industrial Average Like the NASDAQ, has not taken out its September high yet, but sitting very, very close to it. So we'll see if the Dow and the NASDAQ composite can break out here in coming days. But the Dow right now up close to 28 points to 13,623. Earnings season, really going to be busy next week, but we did have some reports to go over today. Let's take a look at the Philadelphia Semiconductor Index here. Of course, it did not report earnings, but we'll see what effect Intel is having on the stocks. Not too bad. Sort of reminds me of how you look at the NASDAQ 100 with Apple acting as weak as it is. The NASDAQ 100 still hanging in there, really not doing much wrong, even though Apple being a big component to the NASDAQ 100, pretty impressive performance for the NASDAQ 100 despite Apple's weakness. Intel taking a big hit today. But the Philadelphia Semiconductor Index only down about 0.5% here. You can see a nice little inside day taking shape here. But let's take a look at Intel, because it was a disappointing quarter. Shares of Intel had been rallying nicely ahead of the numbers. A nice day of outperformance for the stock yesterday, but a big gap down. Intel now down close to 7% to 21.15. Earnings down 24% from a year ago to 51 cents a share, 3 cents above the consensus estimate. That was about the only good news in the report. Sales were down 3% to $13.48 billion. That was mostly in line. The company issued a fairly light first quarter revenue outlook. The story here is Intel still being out of position in terms of semiconductor trends. Of course, Intel, their main business is PC chips, and demand for PCs continue to fall off a cliff due to the emergence of tablet computers. Intel is trying to make inroads in the smartphone and tablet market, but definitely late to the party. Mentioned two chip names on the webinar yesterday that are very well positioned in mobile here, and they've been well positioned for a while. That's why you see their stock charts looking so strong here. Taiwan Semiconductor Manufacturing today down 12 cents to 18.14, and arguably one of the strongest stocks in the market here right now, ARM Holdings. Just not giving up any ground here. ARM Holdings should be able to grow annual earnings by at least 20% over the next couple of years. And again, both companies very well positioned in mobile. ARM up 0.5% today to 41.55. We also heard from American Express. Remember, I think it was last week they pre-announced earnings. So Wall Street had a pretty good idea of what they were going to hear today, but American Express under a lot of pressure, down 1.9% today to $59.60. Earnings were up 9% to $1.09, 3 cents above views. Sales up 5% to $8.14 billion, mostly in line. Amex said cardholder spending rose 8% in the quarter, and we know that American Express is also cutting 5,400 jobs in its travel business. Also heard from Dow component GE at last check. This stock was doing quite well, thank you very much. GE up 3.9% to 22.12. You see a breakout over resistance here, over 21.75. So this is a technically a strong action today, very bullish action for GE. Earnings were up 13% to 44 cents, a penny above views. Sales up 4% to $39.3 billion. That was a little bit better than the consensus estimate of 38.7. GE said that Boeing's problems with the batteries in its 787 Dreamliners is not going to be material to its business going forward. Also in the financial space, Morgan Stanley. Let's see how this one's hanging in there. Oh yeah, Morgan Stanley looking just fine here. Morgan Stanley recently broke out over 1950 thereabouts. So it's probably a little bit extended going into today, but now you have a gap up, so it's even more extended here. But shares up 8% to 22.41. They earned 28 cents a share. That was basically reversed a year ago loss. That was a penny better than expected. Sales were up 23% to $6.97 billion, slightly below expectations, but Morgan Stanley having a really solid day today. The XLF, continues to remain in buying range here, but very sluggish performance here. Holding gains, not doing anything wrong technically, but with Goldman acting so well and Morgan Stanley and JP Morgan, a lot of financials out there hitting new highs. XLF did break out on January 2nd, but it's kind of been a slow, steady move, and actually over the past couple of weeks it hasn't really gained much ground here, but technically still looks pretty good here. Wanted to take a look. We've touched on this name. It's been a little while, but we want to revisit it here because I really like the look of it. EverBank Financial. This is a company that came public in May last year at $10 a share. They are based in Florida, specifically Jacksonville. They operate a small bank, 14 offices in the Palm Beach, Miami-Dade, and other Florida counties. $1.9 billion market cap. Fairly liquid with an average daily volume of 650,000 shares, but really like the fact that revenue growth has been accelerating in recent quarters here, and technically it is in a bullish setup here. So while we're in an uptrend, I want to keep paying attention to bullish technical setups like EverBank Financial. Remember, we just got done talking about new issues, how you want to focus on IPOs that are showing relative price strength with good fundamentals, and EverBank has both here. So this is basically a base, a sideways consolidation here, starting to get closer to its high set in October. This is a breakout candidate. Plain and simple, the fact that it's an IPO, again, fundamentals are pretty solid, and could still be in the early stages of a move here. So like the look of EverBank Financial. Of course, like I said, the institutional quality large cap names, Goldman, JP Morgan, Morgan Stanley, a lot of these names are extended right now, but nothing wrong looking at some small cap names in the space that could head higher from here. Also wanted to check in on the mortgage servicers. A lot of people missed the big housing breakout in July. The housing stocks have been running higher forever, but you can still participate in the housing rally by taking a look at some of these mortgage servicers. Kind of a mouthful here. Big banks have been selling servicing rights to some of these special servicing companies like Ocwen Financial. We can take a look at a daily chart here. It is down a little more than 1% today to 37.84, but a nice technical setup that could yield a breakout. And also NSM, NationStar Mortgage Holdings. Big gap up on the day it gapped up. I think that was the day that NationStar said that it paid $1.3 billion to Bank of America for $215 billion in mortgage servicing assets. So remains to be seen if NationStar is going to fill this gap here. It could try, but overall, this is just kind of a low volume decline after a gap up. Wouldn't be surprised to see buying demand pick back up in coming days and weeks in NationStar Mortgage Holdings. So we'll keep an eye on this one as well. And finally, the last name in the group that looks interesting here is Walter Investment Management. This is a company that invests in subprime, non-conforming, other credit-sensitive residential loans. Really like the setup here. Going to keep an eye for, really the resistance level here is just underneath 50, so looks to be forming a little handle area here in light volume. But when you look at Ocwen, OCN, NationStar, NSM, and Walter Investment Management, WAC, and you look at expected annual earnings growth, I mean, this is a legitimately strong growth market, this mortgage servicing market. So what better way to capitalize on a continued recovery in the housing market than by focusing on these three names. So they're front and center on the watch list. We'll decide if volume comes into one. We may. It just really depends. I mean, I really can't tell a difference between the three. They're all very strong. With nice earnings and sales growth, but we'll see which one starts to see increased buying interest. Could happen all at the same time, and we won't buy all three of them, but we'll decide which one we want to own. But definitely like the look of the mortgage servicers here. Taking a look at some other headlines today. How about Amazon.com? We've been talking about this one. Kind of a sluggish, middling sluggish breakout here. It broke out over 263 a couple of weeks ago. Volume was pretty good. It's not doing anything wrong. The stock got an upgrade today to outperform by Pacific Crest Securities. What does it do on the upgrade? It's up 92 cents, 0.3% to 271.40. So again, not doing anything wrong. Was it an impressive breakout? No, I wouldn't say it's an impressive breakout. It is trading above the swing point of 263, and a lot of people view Amazon as an institutional quality stock. And I think we have a weekly chart for Amazon here. Not sure. Well, that's showing its breakout over 255, but Amazon still looks pretty good here. Not reacting all that great to an upgrade today from Pacific Crest. Other newsworthy stocks here. Let's take a look at Life, L-I-F-E. Big gap up for Life today. Impressive move, 10.5% gain to 60.74. This is a life sciences medical research instrument maker. News here is that they've hired a couple of investment banks to conduct a strategic review. Does that mean they're going to put themselves up for sale? Are they going to consider buyout offers? That's usually what it means when company says it's hired banks to conduct a strategic review. Investors like the sound of that. Life having a big day today. This company was formed in November 2008 through the combination of Invitrogen and Applied Biosystems. Tyson Foods also having a good day today. Beautiful breakout for Tyson. The issue here is that the breakout was a little while ago. It's breaking out again. Big move for the stock yesterday, but analyst over at BMO Capital had positive things to say about the stock. They raised the rating to outperform from market perform, saying the meat company could be a beneficiary of news from Cargill earlier this week that it was idling a plant in Plainview, Texas. So let's take a look at a weekly chart for Tyson. You've been listening to me long enough. I like the weekly charts, probably even a little more than the dailies, but the weekly chart here definitely revealing a beautiful, strong breakout here. But again, the buy here was over 20. If you were buying close to 20, you're pretty good. I think with the stock at 21.97, you're already close to being 10% extended in price. So be careful not to chase. That was another theme we talked about in the webinar last night. So many stocks out there that have moved a lot over a short period of time, and when I go through my screens and I'm refreshing my watch lists and looking for actionable buying opportunities, it really is kind of the number of actionable buying opportunities is pretty scant right now, and it's not surprising because the market has been moving for a while. That is one argument that we could, maybe pull back a little bit here. If we get a market pullback, some of these, strong performers that are extended in price will come down to support, preferably in light volume. That will give some new buying opportunities. But just be careful not to chase stocks that have been, moving higher. I know names like 3D Systems, they continue to be on the news almost every day, but this is a perfect example of a stock that is extended here, working on 6 straight gains. The breakout here was really over $45, and it's now $65.75. So this one's going to consolidate at some point, and it's going to come in off its highs, and I would just wait for that to happen rather than chase it up here. And the other 3D printing name, Stratasys, in the exact same boat, very extended after a recent breakout over 77. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN, 877-927-6648. We're going to go over to Cheshire, Connecticut, talk to Michael. Happy Friday, Michael. How are you?
Good, sir. Yourself?
I'm fine, thanks.
Yeah, the company's gas frac. It's done with the oil fracking things, but they use a special thing. But it seems to be they're accumulating today. I just want to get your opinion, and it's the symbol Did you
Yeah,
find it?
I don't know much about it. I'm certainly familiar with the fracking, how natural gas is extracted from shale. They blast,
This doesn't use water, doesn't pollute it. It uses its own system. It's patented, and it's a special system. But it's been down quite a bit over the years. But lately, it's just been going up.
Yeah, definitely starting to show signs of life here. First of all, very speculative stock here. It's I think it trades on the Toronto Exchange and also trades on the OTC, the Pink Sheet market. Market cap of about 140 million, trades about 100,000 a day. In December, it's made a big move since December. It was really in a downtrend here. A stock like this really isn't in my roundhouse. I can tell you that it does look like it's under a little bit of accumulation here. Again, it made a move from $1.40, now trading at $2.20. So.
Well, the report that I read was that there was insider buying in it.
Well, I know Seeking Alpha has definitely had a lot of recent articles about this company that I can see. And the last one I see, on January 16th, apparently there's been some insider buying. Listen, it looks like support is pretty strong, right around what I would say about $1. $1.85 in that area. So at this point, if you buy here, you're probably chasing a little bit. Maybe you wait for a pullback down to $1.92, something like that, with a tight stop. But it's on the speculative side. I don't have a strong opinion on it, but it's an interesting industry, and it's the good things is that the stock does look like it's under newfound accumulation. So you have that going for you.
Thank you very much, sir.
Okay, sir. Thank you. All right, Michael from Cheshire, Connecticut. Yeah, pink sheet stocks, money can be made. It's very difficult, because fund managers are generally not playing in this field. So, Gas Frac Energy Services, GSFVF, thin stock, market cap of 140 million, average daily volume of 100,000. Very tough to get fundamental information about earnings and sales from companies that trade on the pink sheet. So whenever you invest in a company, you want as clear a picture as you can, and that's the main red flag here, is that it is a pink sheet stock. They're not even required to report earnings on a quarterly basis. So fracking, interesting trend in the oil and gas industry, and we'll see what happens. All right, coming up next week, we've got very quiet week of data. Only 4 days of trading next week: Tuesday, Wednesday, Thursday, Friday. We're going to get more housing data on Tuesday with existing home sales, and then Friday we're going to get new home sales for December. See if these home builders can continue their move higher. Seeing a lot of extended names in the space here. ITB extended a little bit after a recent breakout over 21, maybe 21.50. And then a very busy week of earnings next week. We're going to hear from Google and Apple, Intuitive Surgical, looking a little suspect ahead of earnings. We'll see you back here on Monday for another edition of Breakout Investing. Coming up next, the Tom O'Brien Show. Talk to you in a few.